Multi-product break-even analysis is an extension of traditional break-even analysis that applies to organizations producing and selling more than one product or service. Within the program framework, this technique helps management determine the level of sales required to cover total costs when multiple products contribute to overall profitability. Unlike single-product break-even analysis, where one contribution margin is used, multi-product analysis must consider the different selling prices, variable costs, and contribution margins of each product. Consequently, management accountants focus on the overall sales mix and weighted average contribution. This approach provides valuable information for planning, budgeting, pricing, and profitability management in diversified organizations. The foundation of multi-product break-even analysis is contribution, which represents sales revenue less variable costs. Each product generates a different contribution per unit, depending on its selling price and cost structure. Because organizations sell multiple products simultaneously, management must calculate a weighted average contribution based on the expected sales mix. The sales mix refers to the proportion of total sales represented by each product. By combining the contributions of all products according to their relative sales proportions, management can estimate the average contribution generated by the product portfolio and use this information to calculate the overall break-even point. A key assumption in multi-product break-even analysis is that the sales mix remains constant. The weighted average contribution is only reliable if products continue to be sold in the expected proportions. If the sales mix changes significantly, the break-even point may also change because products contribute different amounts toward covering fixed costs. For example, if sales shift toward lower contribution products, the organization may need to generate higher total sales volumes to achieve break-even. Conversely, increased sales of higher contribution products can reduce the break-even requirement. Therefore, understanding sales mix dynamics is essential for accurate break-even analysis and performance forecasting. Management accountants use multi-product break-even analysis to support a wide range of business decisions. The technique assists in budgeting, target setting, pricing strategies, product mix optimization, and profitability planning. By understanding how different products contribute to fixed cost recovery, managers can evaluate the impact of changes in sales volumes, product emphasis, and market conditions. Break-even analysis also supports risk assessment by identifying the minimum level of sales required to avoid losses. This information enables organizations to establish realistic performance targets and develop strategies for achieving sustainable profitability. Multi-product break-even analysis is closely linked to contribution analysis and limiting factor decision-making. Organizations often operate under constraints such as labor availability, machine capacity, material supply, or market demand. Management may therefore seek to adjust the product mix to maximize overall contribution while maintaining an acceptable break-even position. Products generating higher contribution margins may receive greater emphasis if resources are scarce. However, strategic considerations such as customer relationships, market presence, and product portfolio balance may also influence decisions. Consequently, break-even analysis should be integrated with broader management accounting and strategic planning techniques. In conclusion, multi-product break-even analysis is a valuable management accounting tool for organizations offering multiple products or services. By focusing on weighted average contribution and sales mix relationships, the technique helps managers determine the level of activity required to cover fixed costs and achieve profitability. The analysis supports budgeting, pricing, product mix decisions, performance evaluation, and risk management. However, its effectiveness depends on maintaining realistic assumptions regarding sales mix and cost behavior. When combined with contribution analysis and strategic considerations, multi-product break-even analysis provides important insights that support informed decision-making and long-term organizational success.